Hello, everyone, and welcome to Smart Money Cult. This is episode 2 of the series called The Journey, and this is also a series where I discuss the difficulties that a trader goes through, be it with the trade management, with learning the concepts, or applying the concepts, or just in general, making a system or how you transform yourself into a better trader or a better person. It's based on how you want to take it. So, before I get started, I just want to discuss something that I keep getting a lot of DMs every day asking if I have a mentorship program or a course or something. So, the answer to that is no, nothing currently, but I do have one-on-ones where what I basically do is it's a paid one-on-one where it's basically a live session where I take in your problems or the difficulties that you have in your journey, or if there is something that you don't have a wider understanding about. What we do in the one on one is we take that, basically work around that, and maybe try giving you a solution or just help you out with whatever your problem is. So, yes, so whoever's messaging me, this is for you that I do have one-on-ones, and if you want to participate in the one-on-ones, you can just send me a message. I can send you a link where you can schedule the one-on-ones with me. So let's get started with the topic of the video, and the topic of the video is pretty simple in the sense that it's related to what kind of a trader you are or what kind of a trader you want to be. So although it does sound very simple, but this is a very, very, very wide topic. Now, what do I mean by this when I say what kind of a trader you want to be? See, not everyone is trading full time, and I know that most of you would want to trade full time if you could. The only things that's stopping you is basically the fact that maybe you're not consistent enough, or maybe you don't have a wider understanding of the subject so that you can take the leap and just trade full time. So this is a video that will interest you. So let's get started. The first category that we want to discuss here is basically swing traders. This is the first category. The first category of trader, plain and simple. What do swing traders do? You have to understand, when you're becoming a trader, you need to understand one simple thing, which is what time frame do you want to operate on? Do you want to operate on the daily time frame? Do you want to operate on the 4-hour time frame? Do you want to operate on the 30 minutes? You go below this, then you're just going to turn out and become a day trader. So you need to understand what your operational time frame is. And for a swing trader or someone who say maybe has a job or who has other things to look after, you're going to be sticking to, say, a daily chart. Why a daily chart is, it's very simple. If you go back in time, say, let's get into this. Very simple. You see something like this is happening. This is where we are in the chart right now, and what you do is just basically forward this. See, the entire structure is getting broken. The structure is broken, and say this is your point of interest, or maybe this is your point of interest. What do you do as a swing trader is you wait for these many days, because if this is your point of interest, if this area is your point of interest, or if this area is your point of interest, you don't know when the price is going to come to your point of interest. So that is where you need to decide if you have a job, if you have other things to look after, and if you're operating on the daily time frame, you'll have to be waiting for these many days, and no one knows. It's trading. No one knows. It can just maybe go sideways here, then come back and drop down. It can maybe do this, come down and go up and drop down. It's just fractal. So what I'm trying to say is, it comes, it hits your POI, blows through. Okay, you're not trading that, so you saved yourself from a loss. Now this is your point of interest. What you need to understand here is that if this is your point of interest, this supply is your point of interest. This happened on 13th Jan, and where are we on the chart right now? 4th Feb. So that's 22 days. So let's just say on an average you find one trade every month as a swing trader, and say you just decide to take a risk entry or something like that. This is what you do, and this is basically your trade. And as a swing trader, the benefits that you have is that you can risk much more than a day trader. Say, I personally know of people who risk 3-4% in a trade, and 3-4% for a swing trader is not a lot if you ask me. I mean, it's a decent percentage of risk, since your chart can just do this and then drop down, or just do this and then take you out. So it's just a lot of time that you have to manage your trade, and that time is going to prove beneficial to you. So this is what you can do as a swing trader. So you need to understand one simple fact, that you don't have to go on the 5 seconds to be a profitable trader, or you don't have to go on a 2 hour or a 3 hour or any time frame. You just have to basically operate on the time frame that you think is fit for you. I mean, that's how you determine your trading style. So this trade would run like this. Say it would take you out. If it doesn't take you out, you have a wider stop, you're done. I think this with a 5% risk is a 6 hour. So that's like 30% on your capital in, I don't know how many days. Say you get in here, I don't know the management rules that you have, but in 25 days, so in a month you're up like 15, 20, 10% or whatever. So that is the first category that we are discussing, swing traders. The benefit is this, that you have longer time to play your trades out, and a better way of managing your trades. I mean, not necessarily, but if you have a system that revolves around a daily time frame or a very high time frame, this can be very beneficial to you. You just have to understand and accept the fact that you don't need to trade the 5 seconds or the 1 minute or the 15 minute. If you're comfortable doing something like this, and this is just one chart, right? This is just you. There are many other pairs which can potentially give you 3, 4, 5 trades a month. I mean, 3, 4, 5 trades a month. If you have a 50% win rate, and you're taking partials at like liquidity, you could be making, I think, at least 4 or 5 hour a month doing that. So that's one thing you need to consider. Swing trading, it does take a lot of time. I mean, this move just happened because it took off all the liquidity, and then it started pushing itself down. But in case this was happening, you could be in a trade for, I don't know, say days, weeks, months, you never know. And once a structure like this starts developing, it's not going to be as easy as this. It's something else is playing out here. So that's one thing you need to consider for yourself. You can take higher risk, and the rewards are generally good, but it's all up to personal preference. So that's the first category that we are discussing, swing trader. Second category is a day trader, like a normal day trader. Let's just discuss what a day trader does. And so that's basically just my category, my personal category. Let's just cap this, day trader. So what does a day trader do? I don't give a shit about what the daily is doing, honestly. I know this entire candle in itself, the last day candle is 117 pips. And if you know what 117 pips is in Forex, it's something that can sort you out for, I think, weeks. I mean, if you catch, say, half of this candle, you can be done for the week, or maybe more than that. So the daily candle doesn't matter at all. What honestly matters is where we are on the chart. As a day trader, my job is very simple, and I mean, as we're discussing this in a wider term, I'm just going to say this, that safe. I need to know that we are in a range. The range is broken down. There is a potential move that is going to occur, and if this is my point of interest, I'm going to wait for this to happen and break down. That's day trader. What am I doing here is, I know this is a range, and I know this again is a developing range. If I move on to the lower time frames, this is a developing range, and this is again a 2 hour POI. Everyone is suddenly so bullish on EU, and I mean, the retail was basically there are stats that show on FX book that retail was heavily bullish. I mean, they were heavily bullish here, everywhere. But what you need to understand as a day trader is that we are still holding the bearish range. I mean, there is absolutely nothing like the outlook video that I made last week. We are still in a bearish range, and this is what is happening inside is definitely and as you can see, I did catch bullish trades. Why was I able to do that? Because I saw range shifting here, simple. And I knew something of this sort was going to happen. But was I bullish? No, not at all. I would be bullish after this. If this breaks and it starts holding out, you have to understand we still have a wider range to play with. So simply put, my job as a day trader is I know where I am on the chart. Just because I say the daily doesn't matter does not mean it actually doesn't matter. I mean, I need to know where I am on the daily. I need to know where I'm on the 2 hour. I need to know where I'm on the 1 hour, 30 minutes, 5 minutes. And only then can I think of moving to the 1 minute. Now, once I go to the 1 minute chart, I need to make a picture for myself. And what is the picture? I know the chart is doing something like this. It's doing something like this. This is that range that we were talking about that you can monitor as a swing trader, and this is the current range that we are in. There's a point of interest here. There's a 2 hour point of interest here where it's still holding, and we are still looking at some bearishness from the range. That's what a day trader does, or basically that's what I do. That's how I like to picturize where I am in a trade. And if you zoom out, that's exactly what we are doing, right? It's just the same thing that I discussed right now. So being a day trader is not just jumping onto a 2 minute or a 1 minute chart and just being like, okay, this is bullish, so let me take bullish longs from here. I mean, see, it could work out, you could get a break even, but that's about it. In the longer run, you're just going to be taking break evens and not getting any results out of it. So one thing that I want to specifically touch on is that just find out what kind of a trader you want to be. Because if you're watching others on the internet take 5 second trades or 1 minute trades or 30-minute trades, that does not mean that you need to be doing that to make money. I mean, money can be made on any time frame. All the time frames are same. They're all the same. I get this question a lot, and a lot of people ask me which time frame I prefer, or which time frame they should be looking at, or if all the concepts apply to a specific time frame. The answer to that is no. It's a simple no. Why? Because you just move out, you go on any single time frame, you're going to find the same things. Everything is going to remain the same. I go on a 1 minute. Now, if I take this trade on a 5 seconds, just like I did, I exactly know what was happening there. If I do the same thing on a 3 minute, it's not going to look any different. I mean, it's just going to be same. It's just that your point of interest remains the same here too. So it's all the same thing happening over and over again. You just have to be smart enough to realize it very quickly that all the time frames are same. They're not doing anything special. It's just that you are under the influence of a higher time frame, which is why you need to know where the story is. I mean, where the price is and what the price is doing, and what the price was doing prior to you getting into the charts. So as a swing trader and day trader, I personally only day trade. I do not take swings because I don't like my trades to take that long to activate. I mean, I'm sitting in front of the charts for 12, 13, 14 hours a day. This is what I do. So I don't need to be monitoring something on a very, very high time frame. I mean, I don't need to be taking trades on a very, very high time frame. And the benefits of being a day trader is that you need absolutely no FOMO. I mean, you will have absolutely no FOMO at all. Because see, if this is just to give you an example, let's delete this off, everything. I see a break here, and this is my demand zone. So if you guys remember, if I'm not wrong, how long did you wait for the trade? Long did you wait for the trade here? I think it was somewhere close to 20 days. Oh yeah, 25 days. Show you the magic of day trading is, I see this break. What do I do? This candle, this specific candle is my point of interest, right? How long do I wait for? 30 minutes? That's it. So what is 30 minutes out of a day? It's absolutely nothing. If when I know my point of interest is here and the chart has done something like this, I'm looking at this happening, correct? I can just set an alert here. Move off the charts. When my alert hits, I come back, I look for my confirmations and I take it up. So a lot of people keep saying that they have a fear of missing out because they are day trading. That's why they prefer swing trading and all that. I think it's just pure nonsense. It's just that there are setups every 10 minutes, 15 minutes, every 3 minutes. So there's a specific setup on a 3-minute chart. I mean, a setup like this, it's giving you, if your setup gives you a trade every 2 hours, every 3 hours, even that's pretty good for day trading. And if you're operating in a market like the Forex markets, if you're trading the London session, you have so much of time. You have so much of time that you can literally take 3-4 good trades a day. And you just need to understand that over trading is not going to cut it. Then you can just, if you're trading on the 1 minute, and it's again the same thing, I just go here and we'll see when the trade activates there. 26 minutes. How is 26 minutes bad? I mean, if I can find a trade every 26 minutes, I don't think I need to operate at the daily chart. Because the thing is, if I can find one trade every 60 minutes, and say my session typically lasts for 5 hours, I'm finding 5 trades a day. So that's basically 50 trades in 10 days, or say 100 trades in a month. So why would I wait for 25 days for my trade to activate? And again, if you just add up the risk to rewards and the risk and those things, it's just going to turn out the same. So you don't have to be biased towards a type of trading. And yes, third thing that I want to include, I just remember right now, is scalping. I don't think I count that as a different category because it's a part of day trading. It's clearly a part of day trading. Scalping is not just buying high quantity, high lots and then just selling them off when it moves like 1% or 2% or 0.1%. That's the wrong idea that people have about scalping. Scalping is clearly not that. Well, if you notice, what I do sometimes is that if I'm catching a long here, if I'm trying to take this long up here, once this high is broken, I'm already break even. That doesn't make me a scalper. If I'm in a trade like this, that doesn't make me a scalper. I mean, it's just a part of day trading. You sometimes, to manage your capital, or if your trades are too fast, you're getting in and getting out at the right areas, then there's no such thing to define as a scalper. I mean, these are just the primary things that are in focus for today's video. Since a lot of people that, I mean, once when I started trading, I remember that I started trading the 1 minute charts. I started trading the 5 minute charts. Then I moved to the 1 minute, and I was just trading the 1 minute because no one told me that no one told me if what I was doing was wrong or right. So I did not have any guidance as such. I was basically it was just trial and error. And I mean, if you have someone to tell you all these things, you can just save yourself a good 3, 4, 5, 6 months, a year, 2 years, you never know. You can just save yourself a lot of time if you have the proper guidance, and if you just know someone who you think is the right teacher for you. Anyway, let's not drift away from the topic. So the thing is, after operating on the 1 minute time frame, I found out that a lot of swing traders were making money, and I started swing trading. I started making money with them, but then I started realizing that the money that you make with swing trading in this case was, was negligible compared to what you can make with day trading. See, since, like I told you, I don't know when my POI is going to hit, and especially if I'm operating on a daily time frame, that is 24 candles, that is 24 hourly candles. So I have to wait for a very, very, very long time, because I know if the charts print my POI right now, if this is happening, if this is my POI, I clearly don't know when it's going to come here, right? And then what you end up doing is you just start marking out random areas here, expecting price. When the price comes here, you try taking a long, you lose. When the price comes down, let me just draw that easily. Yeah, this. If I know there's a break here on a daily chart, I don't know when the price is going to come back here. So what I used to do, and I'm sure most of you are still stuck in the loop, but what I used to do was I used to just drop down time frames, look for random areas. I mean not random areas, but you know, if you're on a daily chart and you mark out a 5 minute demand zone, you know it's probably not even relevant, but you still do it anyway. So if then you mark out these point of interest, this is your point of interest, this is your demand zone. When the price comes here, you take a trade, you lose. Comes here, you take a trade, you lose. So by the time you actually reach your point of interest, you have made so many losses that if you finally end up taking something like this, when price does this, it kicks you out, say 2, 3, 4, 5 times, and finally you catch a 5 hour. In your head you're happy because you've made a 5 hour, but have you really made a 5 hour? No. As simple as that. So all these things matter a lot in trading. It's all going to add up if you start adding all these things up, and you start taking notes of these things, you start journaling, it's all going to add up. And it is only when you start journaling your trades and you start writing comments on each of your trades, you're going to understand that you're not going to be making the same mistake again. If I write this down saying that I'm operating on a 1 day time frame and I will only take trades based on a daily time frame bias, I know all these demand zones are not going to matter to me anymore. So what will matter to me? My point of interest. When the price comes here, I take a long. This, there, it's just and all this doesn't matter to you. Comes here, blast. It's a 5 hour for you, and you're done. I mean, that's how systematic it has to be. You need a lot of discipline for this, and I think it's a very cliche thing to say, but you have to be very disciplined in trading. And by discipline, I just don't mean that you need to learn the concepts and then put them to use. I see a lot of people sending me like very complicated charts, but I mean, if you're adding all those concepts, they better work for you, right? And if they're not working for you, why not try making it simple? That's what I try doing. That's what we do at Smart Money Cult. We just try making things very simple, that you don't have to go through the complicated shit to understand the easy stuff. And it definitely is not needed to make money. It's best to know everything. I spent a lot of my time studying Wyckoff and all these concepts, and I've tried making it as simple as I could. So try understanding and try figuring out. Try just what I would honestly suggest for everyone is just go back and chart. Just go back and back test. If you think swing is working for you, if this is your point of interest after this break, let's see if price comes there. Okay, price doesn't come. So what have you done here? is basically you've wasted 40 days. I mean, you haven't wasted 40 days. If that's how you like operating, good for you. I mean, at least you're being disciplined, and that's all that matters. Now, if this happens, there's a break. If this is my point of interest, actually, let's refine that to this. What am I going to do? Wait. Okay, doesn't happen. There's a small break. This is my point of interest. Hits my point of interest, blows through. And when it's blowing through, you have to understand this does not mean that you're wrong. This absolutely does not mean you're wrong. That if this was your point of interest, the price taps in around this area. Let's zoom in and make this clear that when it hits your POI and blows through, you're not taking a loss. It doesn't mean you're taking a loss. It all depends on your system, entry management, and how you basically position yourself based on your entry criteria. So when it taps here, you see this. Even this move is pretty big, man. I mean, if this move is like 20-25 pips, I mean that's not bad at all. If you tap into these areas, you can maybe instantly get out at break even. So if your zones don't hold, that doesn't mean you're wrong. It just means that they just don't want to hold. Simple. And if you see, this operational range is a very shallow range, so you can't expect this range to hold. It's probably going to go for this liquidity before doing its thing. That's what you have in picture. I mean, that's where your concepts come up. That's where your concepts are useful. Your concepts are going to only work for you majorly when you're backtesting, because that's when you're collecting data for your system. Once your system is formulated, it's all going to be very natural. You know there's liquidity here. You know it could just take this POI down. Simple. There's nothing more to it. There we go. That's a nice liquidity grab there. And I mean, you just have to keep talking to yourself when you're trading. I'm just showing you how to backtest so that you can go back in charts and just do this for yourself to see what works for you, what doesn't work for you. This is what you do. Simple. Your area is broken down. Anything that's happened. Oh, and by the way, if this was a point of interest, 30 days. And in 30 days, if you are able to catch this anywhere, you end up catching a good 1.5%, 200 pips, 300 pips. I don't know, it depends. So then you get rid of that. And then it's the same process over and over again. You do this live, you do this on the back test. This area gets taken down. This, for me, this would be the point of interest. I don't know if price goes there, but yeah, this is just what I wanted to talk about. And as a day trader, it's the same thing on any time frame. As a day trader, you do something like this. I mean, just wait, see this area, wait for a break. Okay, it breaks, the protected high is taken out, you wait for it, price comes back and just blasts. That's how you need to formulate a system for yourself. I mean, first understand and identify the kind of trader you want to become. You can't be a scalper, you can't be a day trader, you can't be a swing trader. I mean, if you honestly want to do that, keep 3 different accounts and keep one account specifically for like day trading and the other one only for swing trading. That's what I would honestly like suggesting, since a lot of people think that trading is all about learning concepts and trading is just all about just executing those concepts. I mean, yes, you need to know everything, and I spent a major chunk of my trading career just learning everything. And after learning everything, I was able to understand that there's no point if I can't apply these. There's no point if I can't apply my concepts on the charts. And if the concepts don't necessarily make money for me, I know it's going to be pretty much useless. So all the time that you spend learning is going to be useless if you don't know how to apply them. So you need to understand that. Stop overcomplicating things for yourself. You don't need to specifically know every concept out there. I'm the kind of person that will go out, research on all the concepts, learn everything, and then after you learn everything, after you think you know everything, then you can start just cutting things down for yourself. See if it works for you, and most definitely, if you're disciplined enough, if you have your own system, if you have rules, if your rule is, say, I don't want to trade something which is an impulse range, then you're not never going to be trading it. Simple. And if that rule is profitable for you in your tests, in your back test, in your front test, or in your live testing, I mean, then that's discipline right there. So just remember that it's all about following your rules. And if you think you're following your rules enough, and if you think that the rules that you have made are producing good results for yourself, then you don't need to be asking me, you don't need to be asking anyone in the world. If it's working for you, it's working for you. It's that simple. Just remember that over the long term, I mean, you need to be taking at least 500 trades before you call your system profitable, or before you call your rules being profitable. Because once you start laying down rules, if I lay down 5 rules for myself right now, and I know 5 trades in, 10 trades in, those 5 rules are going to become 15 rules. I mean, that's how it works. Because each time you journal something, each time you write comments on something, you're going to learn something new about your setup, or about your rules, how you can alter them, how you can modify them. So it's always better to lay down rules that you think have a possibility of working for you. After you're done doing that, put them on use in the charts, see how they work for you, get your data, journal at least a minimum of 100 trades before you even actually think of calling yourself profitable or consistent. And if you're successfully able to be profitable in the tests, move on to live charts, get a demo account for yourself, take 100 more trades on that, and just based on back testing, I think my personal opinion is that if over 100 trades made you, say, a close to 100 hour, for an example, in back testing, that your setup should be making you at least a 50 hour in 100 trades. So let's just keep the average let's just average it out to 50%. So if they are making 50 hour for you in 100 trades, and if you're getting a setup you're getting 5 setups I mean 5 trades every day, that's 100 trades in 2 months. If you can make 50 hour in 2 months, I think you don't need anything in life. It's fairly simple. So this video is nothing technical. I just wanted to have a chat with everyone, and all of you who keep asking me about which time frame you should be operating on. There's no answer to that. Every time frame is the same. What I can do on the daily, I can do on the weekly. I can do the same on monthly. I can do the same on hourly. I can do the same on minutes or seconds. So don't limit yourself, as I always say. Just keep working on it. If you think you run into some trouble, or if you run into some problem that you can't find a solution for, you can always message me. But just understand that you already have the solutions for everything. I mean, it's all in the head. Time frames don't matter, and that's all I have to say for the episode 2 of this series. And the further videos that I'll be releasing will be more on the technical side. So this one is just a little pep talk before we start preparing for the harder sections of this episode, this journey. So I'll see you guys in the next video. Thanks.